So a little bit more than an hour to go, and you can see there's been some nibbling here in the market. The big question, though, should you be doing it? Should you be trying to buy the dip or maybe waiting a little longer? Joining me now, Main Street Asset Management CFO Aaron Gibbs, along with Wells Fargo Advisors Senior Vice President Mark Smith. Mark, I mean, you doing anything in this environment right now other than sitting on your hands? They should be warm by now. I mean, golly, you've been sitting on it for a long time.
Listen, there's a lot of places that have value right now. One that we're finding is in the financials. You've never seen the banks in a better position, I think. When you have rates going this high, they're going to go higher. The net interest.
You think the rates are going to go? I mean, how much higher?
I think they're going to go a lot higher, Charles, because
okay.
I just talked to a client who just sold their place. They got 7 offers. Every one went higher than the other. They're going to best and final now. So if real estate's an indication, inflation's still here to stay. I haven't seen anything going down in any of these grocery stores. Gas prices are down a little bit, but from where it was 2 years ago,
right,
super high. So I think that inflation is going to continue. A lot of money in people's pockets. And so the financials is a sector I think that's going to do the best in a rising interest rate environment. And then look at all these electric cars. I like this new ETF, LIT, because it takes advantage of all of the different companies that fuel those batteries.
Lit is lit, right? So
lit is lit. I love it.
And you know what's really good, too, is at some point they'll even let you drive them in California. So first they make you buy them, and then they say, don't charge them up. Okay.
Hit the solar.
Yeah, I'm ready to buy some sneaker stocks myself. What do you like here?
So I'm looking at healthcare. There are a couple companies, Centene and United Healthcare. I know, not terribly exciting managed healthcare, but like some really good valuations.
You mentioned Centene before, though.
Yeah.
And it's been doing really well.
Yeah, so it's sort of like one of those under-the-radar stocks that every time the market gets wobbly, a little shaky, these stocks hold up. They still do well, outperform the market. So I think those are a safe place, particularly until we get, our more CPI numbers. The Fed meets in September. Those are safe places to go for the next month.
Speaking of the Fed, then all eyes on the jobs report tomorrow. Golly, it could be anything. It really could be at this point. I saw a headline somewhere that said one of the reasons President Biden's giving his speech tonight is to get ahead of the jobs report. But if it's bad news, then Mark, the market could get a pretty good bounce. But would you consider that just a trading bounce? I mean, to Aaron's point, don't we need a lot of information before we can say the Fed's done?
Yeah, you need quarters and quarters of info because, as the Fed chairman said, this is going to be a long-term issue, this inflation, and they're dedicated to combating it. And so it could be good, right? It's an election year. If they're great numbers, I'd want to have a speech about that too. So let's see what happens tomorrow. But in either case, the Fed is what you got to look at. And as long as they have this tightening policy, you watch out. Volatility is going to persist.
I noticed that the Atlanta Fed GDP for the quarter, really, this is one of the biggest moves I've seen, day-to-day moves, is at 2.6%, I think now. 2.6 is the highest it's been because some of this data is coming in better than expected. You know what I'm getting at here, Aaron, is there was a time when you wanted a strong economy. To be the backdrop for a strong stock market. And it's so weird to have to root for a recession because essentially that's where investors are. But isn't it something weird about that?
No, and it's always difficult as a money manager to be in this bad news is good news and good news is bad news environment because it just fundamentally doesn't make sense. Like, I want companies to make more money. But as long as we have the Fed raising rates, and this won't last forever, but as long as we're in this sort of inverse world where we're worried about rates, you got to just look at things the opposite, which I know is a little mind-boggling, but it's all about the 10-year, it's all about the Fed rates, and right now the stock market is tracking the 10-year yield so closely, so you got to watch that.
Do we test the bottom? Do we test that June low?
No, I don't think we're going to go that low.
Okay.
I think, because we've already started to see inflation come down. Of course, that depends on what we're going to see with the CPI in 2 weeks.
Mark, you think we might have hit the low?
I don't think so. I think there's more to go because as long as these rates continue to rise, you're going to have volatility, and I think till the downside. Remember, the Fed's doing this for one reason and one reason only, and it's to make sure that there is less liquidity in the market, people have less money in their pockets, employers feel less comfortable hiring, and that's going to hopefully fix all these problems that we've been talking about for the last few months, right? So as long as that's the case, buckle up.
All right. Well, we've been buckled for a while. Some of us have been sitting on our hands for a while. Mark, Aaron, thank you both very much.